YouTube channel. Today I'll be taking you guys on financial accounting. The questions here are the likely questions for SSCE, WAEC, JAM, etc. So now we go over to question number 1. Which of the following is not an intangible asset? First of all, what is an intangible asset? Intangible assets are those assets that are not physical. They are those assets that we can't see, we can't touch, but we can feel it. Example of them are license. License are the rights given to an individual to do business by the government. Example of them again is goodwill. Goodwill is the good name of the company. So therefore we go over to the options. Option A, license, which I have explained earlier, is an intangible asset. Second one, patent right, is also a right given to an individual to do business. Then the third one is trademark. What's trademark? Trademark is what a business is known for. Example, the logo of a business like SON, INEC, and the rest of it. Then fiction. Fiction is not an intangible asset. Why? Because fictions, we can see it, is just like wallpaper in an office, seat, furniture, and all the rest of it. So according to the question, it said the ones that are not intangible assets. So our answer here is fiction. Okay, now we go over to question number 2. Which of the following is a capital expenditure? When we say capital expenditure, what do we mean? Capital expenditure are those amounts of money used to purchase assets that last more than one accounting year. So here, salaries and wages, they are like expenses. They don't last more than one accounting year. Then stationery, same thing. Then repairs of motor van. Remember, capital expenditure is the purchase of assets that last more than one accounting year. But here, it says repairs of motor van. All of us know that motor vehicle is an asset, but due to its repairs, not purchase, then it's not a capital expenditure. Then the D part of it is purchase of furniture. Furniture is an asset that lasts more than one accounting year. And here they said purchase of furniture. So our answer here is option number D. Okay, now we go over to question number 3. Question number 3. Sales of goods 600 to Ade was not posted. This is an error of what? In accountancy, in financial accounting, we have different errors. In accounting, we have error of omission, we have commission, principal, compensation, and many others. Even error of double entry. So, but I will explain a few of the errors and then tell you the answer to the question. Error of omission. That it occurs when an account is not posted at all in the books of an account where it is supposed to. Then error of commission. Error of commission is when an account is switched, whereby, an example, 600 to Ade was posted to account of Adia or Chika. That's error of commission. That's where two accounts are switched. Then error of principle is when the principle guiding the financial accounting are not being followed, whereby you credit your debtors and debit your creditors. So to the question, pertaining to the question, sales of goods 600 was not posted. That means it was omitted. So in this question now is error of omission. Okay, we go over to question number 4. Shares sold at the nominal value are issued at dash. Nominal value, we can say that shares are issued at nominal value when they are issued at the face value. That's the main price by which a goods is cost. So at a discount, that means it's not the nominal value, at a premium, at a loss. So the answer to this question is par. Why? Because another name for par is face value or the main amount. That's how you define your par. So our answer here is par. We go over to number 5. The excess of current assets over current liability is dash. assets that are used in day-to-day running of the business. They are used to bring more capital or money to the business. While current liability are those liabilities or are those assets or money owned by the company to another company or individuals. So when the current asset is over the current liability, by me looking at the question, we already know the answer. That is working capital. Why is it working capital? Because when the assets used in day-to-day running of the business is more than the assets owned by the company, then their capital are at work. So our answer here is working capital. Okay. Now we go over to the next one. Use the following information to answer questions 6 to 9. Williams and Jacob are in partnership, but there is no partnership agreement. Note, there is no partnership agreement. Okay? The capital contributed are 60,000 and 40,000. That means 60,000 is for Williams, 40,000 is for Jacob. Representatively, profit for the year is 20,000. Interest on capital is 10%. Then the question number 6 says, what is Williams' share of profits? Option A, 12,000. Option B, 10,000. Option C, 8,000. Option D, 5,000. Okay. Mind you, whenever you hear of share of profits, it deals with mostly appropriation accounts, and also why something for appropriation accounts, why something for share of profit, you make use of your interest on capital and the profit for the year, then with the capital they contributed. So let's go back to the solving. So appropriation account. Okay, here I'm using T format. Then the interest on the capital given was 10%. Interest on capital for Williams will be 10% times, that's 60,000, which will give you 6,000. Then for Jacob, 10% of 40,000, which will give you 4,000. Then the profits, we go over to the credit side. Profits, which is 20,000. So therefore, the total here is 10,000. When you minus the profit from the total of the interest on capital, which will give you, when you minus the profits, since there is no other account given in the partnership account, then we move over to the share of profit, which we are asked to find. And to get the share of profit is the difference between the profits and the interest on capital. So the difference between the profits and the share interest on capital, that's 20,000 minus 10,000 will give you 10,000. So when doing for your share of profits, now it's Williams. Okay. Williams. Remind you, there is no partnership agreement. And when there is no partnership agreement, the share of profits are divided equally. So here, where it will now be 10,000 divided by 2. Then for Jacob, that's 10,000 divided by 2, which will give you 5,000, and this is 5,000, making all of them a total of 20,000, and here a total of 20,000. So that's it. From the workings here, we have seen that the share of profit for Williams is 5,000, which is option D. So the question number 7, remember we are still dealing with the information here, which says question 6 to 9. So question number 7, what is Jacob's share of profit? Instead of solving it again, we are using the same solving which we solved before. So Jacob's share of profit, as we all know and see here, is 5,000. So our answer here is option C, 5,000. Okay, this, we go back to the question number 8. What is William's interest on capital? Once you are done with this, it will be easier for you to answer the following question that comes under the partnership. So when looking at the solvings, which we have did earlier, we will see that this interest of capital and the interest of capital for Williams is 6,000, while for Jacob is 4,000. So when we go back to the question, Williams' interest on capital is option C, which is 6,000. Okay, now we go back to question number 9. If Williams introduced cash of 10,000 by way of loan to the partnership, how much interest will he earn per annum on the loan? Option A, 2,000, option B, 1,500, option C, 1,000, option D, 500. He introduced it as a loan to the partnership. So therefore, we are going to be making use of the interest of capital, and the interest of capital is 10%. So therefore, we are not going to be making use of the whole interest of capital. Why? Because Williams was in the partnership before. He is not a new person. So what we are going to do is we are going to divide the 10% into 2. That's 10% divided by 2, which will give us 5%. So if there is any other suspicious transaction made after this, it will now be 5% for 6,000 and 5% for 10,000, thereby dividing the interest on capital of Williams into 2. One for the loan, one for the initial capital. So here, the amount he contributed, he later includes as a loan is 10,000 naira. Then 10,000 divided or times 5%, which will give us 5/100 times 10,000/1. Okay, cancel that. 5/500 will give us 500. So the interest he will be getting on his new introduction of cash as a loan to the partnership will be 500, which is option D. Okay, we will be going over to our last question for today, which is question number 10. In a bonus issue of 1 new share for every 4 held, note 1 new share for every 4 held. A holder of 1,000 shares will get additional shares of dash. Option A, 50,000. Option B, 25,000. Option C, 20,000. And option D, 10,000. How do we go about this? Okay, let's go back to the solving. Solution. Okay. 1 new share for every 4 held. That is 1/4. Some of you might be wondering, in a situation whereby they said 2 new share for every 8 held, it will look like this, 2/8. If they said 8 new share for every 2 held. It will look like this, 8/2. As far as the share that is being mentioned, how many of the share that is being mentioned comes as the numerator, while how many of the share being held comes as the denominator. So I'm very sure you understood. So here 1/4 of the total shares of 10,000/1, which will give you 4 divided self 1, 4 dividers 25,000, which is your answer. That is B, which is 25,000. Okay. So here 100,000. So it will be 1/4 times 100,000, which will give you, divide here, it will give you 25,000 shares, which is our option B. We are done for today's tutorial class. Thank you for watching us, and don't forget, before you go, press the subscribe button and the like button, and follow us for more tutorial classes on every subject. Thank you.